Hi there, welcome to Nepi Invest, and welcome to the final day of July. And what a day it has been! Everything is up big. I'm not actually sure why. There was some news flow about the economy today. Let's just go to Trading View. And in Trading View, if you see this little lightning thing down the bottom here, they'll tell you this about stuff that has happened in Australia. So Australian retail sales rise 0.5% in June. Australia's CPI indicator up 3.8% in the year end of June. Australia's inflation steady at 1% in June quarter. So obviously the market has loved something, not what happened on the American markets overnight because the Nasdaq was down, although the Dow Jones was up 0.5%, and we could be closing at an all-time high, very close to an all-time high right now for the XJO. And again, the XJO looks pretty good. So pretty good day on the markets today, including small caps up 2.2%. In fact, a lot of these indices are up by over 2%. So pretty good day on the markets. So the agenda for today's video, we'll have a look at the best and worst performing sectors, indices and companies. And then I'll go into the top 5 stocks of the day. I have drawn up a bit of a list right here. Bit of a list of 5 companies. I am or have been umming and ahhing about one of them. And I'll talk about a few other companies as well. And then we'll have a look at a few pennies, 4Cs and 5Bs, of course. We've seen a plethora of those being released today. And when I say plethora, I mean a plethora. In fact, if you have a look at let's go to tools. Yeah, just have a look at the amount of price sensitive announcements today. Typically, the last day of the first month after the end of the quarter tends to have the most announcements. And I'm not kidding. So if you just look at market sensitive announcements today, so far up to 552, and that is going to grow significantly. Maybe 150 more, maybe even 200 more during the rest of today. If you just go back last week, just for comparison, last week we saw at most 187. That was on the Friday. And if you go back 1 week further, wouldn't be surprised to see one day with, on Friday, the 19th of July, only 79 events. And the busiest day that week was Wednesday, the 17th of July, with 117. So again, probably one of among the busiest days of the year. 4 of them. Last day of July, last day of October, last day of January, and last day of April. Because the amount of these quarterly reports, because most companies like to leave it to the last minute. They like to procrastinate, or they realize the quarter was not that good and they want to release the pennies 4C or 5B in with all the other companies in the hope it might get lost. Anyway, so a few of those pennies 4Cs and 5Bs, I tend to find the best quarter reports tend to be released before the last day. So a lot of these final days of the first month after the end of the quarter tend to be not as interesting as previous days because a lot of the dregs get released today, put it that way. Anyway, but a few good ones have been released today. I don't want to dismiss some of these companies. Okay, so have a look, and might have a look at some charts. And if I have time, I do have a time limit, by the way. If I have time, I'll have a look at a few of your comments because there's a few interesting comments. Now, I always have to go through the comments because sometimes I get spam, and sometimes you'll see a comment being released about Bitcoin, and then within a minute, you'll see about 20 replies, and that's spam. Always have to report it. So this one from Ordinate about a broker downgrade and OSL. Pretty sure I've mentioned that before. Anyway, let's go to the ASX today. An absolutely wonderful day. Is anything down? That is the question. Or utilities is down 0.23%. Utilities tend to be a little bit more defensive alongside staples. So again, for those who have bought defensive companies the last few months because they're getting scared the market is going to crash or something, they've not had a wonderful day today. But if you're heavily invested in IT, I don't understand. IT is up 2.61%, but the Nasdaq was down by about 1.5%. So for some reason, tech companies in Australia are doing a little bit better than tech companies in the United States, and the valuation of tech companies in Australia tends to be at a much higher premium than those other companies in America, like companies in America, because there's fewer tech companies in Australia. That's what I've been told. There are fewer tech companies in Australia, so there's more competition. Um, People more willing to pay a premium because there's fewer of those. I don't know, not sure if that's real. ASX 20 up 1.25%. Let's have a look at the companies within the ASX 20. I would assume only maybe one or two companies are down. Yeah, every single company in the ASX 20 is up. Congratulations. First time I've seen that for a while, and it's understandable. Woolworths is up slightly. That's probably one of the companies I would have thought maybe could have been down. And the best performing companies, Fortescue, nice bounce today, not surprising. Woodside, it is, I wouldn't say cheap, but it's at about $27 or just above $27. Wesfarmers, Rio Tinto, Transurban, QBE. So a few of these companies had nice bounce after the doldrums yesterday. And I actually did have a look at the iron ore prices. Iron ore prices actually did fall yesterday, and that probably explains why Fortescue, Rio Tinto, BHP had a negative day. Okay, so let's get to the best and worst performing companies. And I would think a few of these companies released the pennies 4Cs or 5Bs, and there is one of them, Space Talk, nothing to do with space, I believe. Share price is up 29.41%, not a lot of turnover, and the market cap of the company is not that high, 10.4 million. I have written that down as one of the companies I did want to speak about, but it is not in the top 5. Control Bionics, up 22.6%. Don't want to speak about that. Appen, another good day, up 19.4%. Structural Monitoring Systems, I wasn't going to talk about that company. I had a look at their pennies 4C, and I was like, okay. But the chart is interesting, so I'll just put that down as another company I'll discuss. Structural Monitoring Systems, up 19%. Did Bluebet release theirs? I have a feeling Bluebet released theirs, or no, maybe it was PointsBet. PointsBet released theirs, and wouldn't be surprised to see PointsBet having a good day. I'm just going to see if Bluebet released there as well. Or was that BetMakers? No, Bluebet released their pennies 4C today, and the share price is up 14.3. So the market likes that. Let's have a look by market cap. We have, quite a few resource companies in there, so not surprising. But to be honest, nothing of note of in this at all. Yes, I'm saying Coronado Global Resources is nothing of note. Vulcan Energy share price is quite volatile these days, so nothing of note for me is in this list, except maybe Appen. And let's have a look at the worst performing companies. And I'll tell you like this: when you look at your portfolio and you see a few companies down, you just want to spank them because they've had a bad day, maybe have ruined your portfolio. Maybe not ruined, that's probably the worst bad word. But for instance, maybe you're a shareholder of Cosmo Metals, down 32.1%, or New World Resources, down 28%, Energy Resources Australia, down again 25%, DeLorean, down 22.7%. This company is in my top 5 stocks today. I really want to discuss this company and try to talk about why the share price is down a fair bit. And it's actually is an interesting story. And that's why this company has come in number 1. And maybe not only you, but I can learn something today about this company. And it does link into why the share price is down. Live Hire released something, but I have not had a look at it. In fact, most of the Appendix 4Cs and 5Bs released after 9:58, I have not had a look at. But Livewire, I believe, did. Let me just confirm that. Whoops. Let me just confirm that. Livewire released their quarterly report at 2:09 p.m. So that's not that long ago. Yeah, I actually did see it released, but I have not had a look at it yet. But obviously, based off the market reaction, they haven't liked it. Oh my, come on, work. There we go. What else is here today? Yeah, a few other companies. Fluence Corporation released their pennies 4C, share price down. Not surprising, in my opinion. But it's probably a few other ones here that did as well. But I just don't remember. Jupiter Mines did release their quarterly report today, down 8.5%. And what else do we have here? Yeah, Fluence. Queensland Pacific Metals released their pennies for 5B today. So the market hasn't liked that. Freelancer's down again, not surprising. Metal Rock, which I actually talked about yesterday, is down a little bit today. There was a slightly negative announcement they did release, so not surprising there. It's only slightly negative about one of their projects, but it's not. It's definitely not. It's not a a structural issue with the company. It's just one small project, and it's not going to really significantly affect the business. Well, their financial numbers anyway. Okay, so let's get to the top 5 stocks of the day, and I do have to choose the number 5, and I am actually no, I'm gonna have to choose number 4. Number 5 is already set, and that is Regional Express, REX, or just Rex, I suppose. I have heard that termed a lot. You notice no buyers, no sellers, and there's a reason behind that. Rex, which is an airline, I think it mostly focuses on regional areas, has gone into administration. This has been rumored over the past few days. They went to a trading halt 2 days ago. What's 2 days ago? Monday. Went to a trading halt. You couldn't sell your shares on Monday because they went to a trading halt before trading had begun. And there were rumors floating around that the company was going into a voluntary administration. One of the reasons behind it apparently was they had tried to expand to the major airports, and that has not gone well. This is not necessarily the end of the company. And not only have we had, but in saying that, not only have we had Rex possibly go to the war, just possibly, we've also seen that other company, what was it called? Boomer or something, not Boomer. Buggy, Boomer, I have no idea. Bogan, that went bankrupt as well. And how many airlines in Australia have gone bankrupt? Ansett. There's been heaps over the past 20, 30 years. It just shows you that airlines or running airlines is a hard job. And I'll be honest with you, in my opinion, airlines are not an investable type of company unless there's massive amount of value. And even then, there is a risk. So Qantas back in 2014 or 15, a share price went below $1, and they were concerned about Qantas at that point in time. So Regional Express or Rex going into a voluntary administration. I actually didn't even open up this announcement. So let's have a look. There's usually nothing much in it. They're just talking about how some of their flights are unaffected. The regional sub 350 or 340 flights are unaffected, blah, blah, blah. But this is not necessarily the end. Now, here's the thing. Have a look at their chart. And the question has to be asked, why would you have been holding shares in this company? Because the chart is horrendous. Share price has dropped from a high. So this goes back to start of 2023. So the start of 2023, the share price was $1.56. Now, just before they've gone into voluntary administration, 56 cents. So share price has almost dropped 60 odd percent in the last 16 or 18 months. And the chart looks horrendous. So this is another reason why using technical analysis can be beneficial. It makes you stay out of stocks like this that possibly have the potential of going to bankruptcy. And I can almost guarantee you, any company whose share price is in a beautiful uptrend will not move into administration or bankruptcy. So sometimes technical analysis can keep you, or most of the times, it should keep you out of these sort of companies. So don't ignore technical analysis just because charting doesn't work. That's what you've been told by quite a few people, quite a few experts. If you do look at charts on occasion, it can keep you out of trouble. It can. I can almost guarantee you a lot of technical analysis or chartists have never held a company that have gone into bankruptcy. And even if you look at the long-term chart, this is a weekly chart for Rex. We'll go back to 10 years. And look at that. This sort of company is not an investable company. So if you're a long-term, one of those buy and hold investors, why? My question would be why? Yeah. Anyway, so that comes in at number 5 because Rex has gone into voluntary administration, which is probably better than the other one. What is it? There's voluntary administration, and then there's the one where you have there's no option. You're forced into is it administration? There's another word, but I forget what it is. So this is probably the better sort of administration. Okay, coming in number 4, this is where I have to make a choice. So I write down my top 5, and then I have the possibilities here, and I erased 2 companies, and then I put back 1 company because I'm not sure which one. So the 2 companies who might coming in at number 4 are Centuria Industrial, CIP, REIT, and they did release their results today. I was thinking, why not talk about a REIT? I'm not the biggest fan of REITs, not the sort of companies for me, but just because it's not the sort of company for me doesn't mean it's not the sort of company for you. And then the other company is Pointerra. And how high was the share price for Pointerra? Up 10.6%. So that has made the decision for me. I will talk about Centuria Industrial or Industrial REIT, whatever it's called, later in the video after top 5. But let's talk about Pointerra. Share price up 10.6%. They did release their pennies 4C. Things look like they might be turning around for this company. Now, I am a shareholder. My amount of shares in this company is fairly small, so I am looking for an opportunity to add to my position. I'm waiting for that turnaround point. I'm not sure if this particular quarter, pennies 4C, is that point, is that inflection point. But there was a little bit of positive vibes again in their commentary. So let's open up their particular pennies 4C. Now, this is where you got to have a little bit of faith that the management are not telling any porkies when it comes to commentary, that their enthusiasm is actually well founded. And possibly it is, because if they found it to be not telling the truth or exaggerating, then more than likely they won't have a job in another year and a half or something like that. So the first thing I always do when I look at a pennies 4Cs or 5Bs is I have a look at the cash flow statement. And straight away I was like, well, at least the receipts are up from last quarter, but not probably to the extent I'd like it to be. And they were operating cash flow negative by 184,000. Not a lot, but it's still negative. Now let's have a look at some of the. Oh, the other thing I always have a look at section 1, section 2, section 3, investing and financing activities. So, for instance, you can see that Pointerra did a capital raising. In fact, they've done a few capital raisings this year to put $5.3 million more into the kitty. Always have a look at section 4, which tells us how much cash they have, 2.7 million because of that capital raising. And yeah, actually, it was mostly because of that capital raising. And then the other one is financing facilities, tells you about the debt, no debt. And section 8 is fairly important, particularly those companies who are burning through a lot of cash, because they have to answer some questions if they have less than 2 quarters of funding left. And you can get some interesting replies to that. You can see how the management is thinking about their cash balances. Sometimes you'll say, well, you only have 1 quarter of cash left based off your burn rate in this quarter. So what are you doing to address the shortfall in cash? And sometimes they'll say, well, this is just a one-off. We do expect the company to be operating cash flow, free cash flow positive the next few quarters, so we don't feel the need to raise capital. I know. So let's go to some of the commentary. Why do I think the market likes this particular pennies 4C, and why was I umming and ahhing about putting the top 5? It's just a few of the things they've said. Now, I should have actually wrote down exactly where, but I did go through this because I am a shareholder. So I went through this a little bit more closely than some of the other companies. So this little slide here, page number 5, improved quarter 4 results and growth in financial year 25 revenue and cash flow outlook underwritten by recent material contract awards and existing customer renewals. Structural tailwinds, US energy utilities finally commencing decade-long multi-billion US dollar grid resiliency programs. Receipts 2.66 million. They also mentioned largest quarterly receipts for financial year 24. That just shows you receipts have been disappointing for this company recently and highest since third quarter financial year 23. Operating cash flows negative 180,000, expected to continue to improve during financial year 25 and beyond. Now, they were slightly operating cash flow negative. So if they are true and it's expected to continue to improve, this company should be operating cash flow and probably free cash flow positive moving forward. That's what I get from that particular statement. So have a look, your market sector update. I actually do agree with that. They do have a point. There is a need for a significant upgrade in the electricity infrastructure in the United States, I think even in Australia. And that is one of the reasons why I have bought some of these energy or infrastructure companies in Australia. And I am looking at some of these companies in the United States as well. but they're also diversified. So they have also interest in mining, oil and gas, architecture, engineering, construction, and operation. There you go. And transport and defensive intelligence. Yeah. Anyway, so yeah, I actually did like this particular pennies 4C from Pointera. I would have preferred slightly higher cash receipts, and it would have been good if they were operating cash flow positive. But it seems like the market is looking beyond that now, which is probably a good sign. Now let's have a look at the chart, and I am getting a little bit more interested in how this company is trading. So this is, well, that's the weekly chart. Let's just focus our attention on the daily chart. Okay, so the last time we had a potential run, this was back in July last, almost 1 year ago. Share price on the 28th of July rallied 150%. That was not a sustainable rally. Share price fell fairly quickly after that. I think this rally looks like it might be more sustainable. It really began on the 28th of June. So we're just talking about 1 month ago. Share price on that day rallied 13.9%. When did they release that announcement? Yeah, 28th of June, the $1.6 million US contract awarded by US Department of Energy. And it seems like there was that really shifted sentiment just enough to get the share price to rally. And we haven't seen a lot of selling since that. And then the share price of the company rallied on the 12th of July, 34%. So, yeah, corporate presentation on the 12th of July. And the most important thing is the share price hasn't really dropped since then. We've seen a little bit of selling a few days after that, but it didn't drop significantly. And now the share price is starting to move higher. So the chart for Pointera is definitely looking interesting if you look at the shorter term. Some really good volume coming in as well. So this is definitely looking much better. So I am close to adding to my position at a share price around about 7 to 7.5 cents. And if a share price fell below 6 cents, that would be concerned. So possible situation where I might be adding to my position. Pointera. I've been probably the most bullish about this company for at least 3 years right now. Yeah, and the market just keeps going higher, doesn't it? Coming in, number 3, we have another company that released their Pennies 4C today. That's SiteMinder. Our share price up 3.3%, which is interesting because at one point today, the share price was up more than 10%, and there was a little bit of chatter about it. SiteMinder, let me just see if I can get it just by Googling, because I did get a little notification that SiteMinder is up 10% or something. I forget who it was from. I think it was from Motley Fool Australia. There's a little bit of alert I got. SiteMinder stock surges 9%. Maybe it was MSN. And I was like, oh, that's interesting, because I did know they released their Pennies 4C. So I decided just to put this company into the top 5 because they are very close to hitting a very important inflection point. In fact, they mentioned they have gone past that inflection point. I wouldn't say that just yet. So this is a software company for hotels, stuff like that. This company is valued quite richly. I would say the market cap is about 1.2 billion, 1.6 billion, a little bit off. So that there's a lot of blue sky already in the valuation of this company. Probably one of the reasons why I don't follow this company as closely. I used to own the company that spun it out. So there was a company, not completely, because I owned a portion of the company, Battledore, whatever it's called. What's the ticker code? BTI? Battledore Technology. They did have a sizable investment in this company, and then SiteMinder listed on the ASX, and Battledore still has a portion of the shares in SiteMinder. I wonder if Battledore had a nice little run. Yeah. Anyway, let's go back to Battledore's. I should have opened up the Pennies 4C. So why? The time is 4 o'clock. So I forgot to mention that I'm recording this video a little bit later. So time is 4 o'clock, so we're now in the closing auction. Always exciting. So let's have a look at the companies of Pennies 4C. And the receipts up to 52.8 million, which was a nice increase from the previous quarter. So receipts are growing with time. But this company spends a lot of money, 13.1 million on product manufacturing and operating costs, $22.6 million a quarter on staff costs. It's a lot of money on staff for a software company. That's just my thinking for a software company. So this company is operating cash flow positive by $8.1 million. Now, For software company, it's very important that they do spend a fair bit of money on research and development, and a lot of times the companies will capitalize that. So I really and always look at the investing activities, intellectual property, $6.6 million. Now, not a lot of money spent on capital expenditure, 94,000. Another thing I look at, which can be relevant, is leases, repayment of lease liabilities, which is an ongoing cost, $1 million. So this company, if you take all that into account, this company was barely operating cash flow positive. I would say, based off this, 100,000, 6.7, 1.3 million, they were free cash flow positive by 300,000. So operating cash flow positive, 8.1 million, free cash flow positive by about 300,000. And I'm pretty sure the company mentioned they were free cash flow positive 2.2 million. Not sure how they got 2.2 million, to be honest with you. I went through the numbers and I don't know how, because 8.1 minus 6.6 is 1.4 million. Maybe they added back I don't know. Maybe I'd say what they did. I'm just thinking that now they added back investments. I don't know. Still don't know how they did it. But yeah, I do my own calculations, and even though they mentioned their free cash flow positive by 2.2, underlying 2.5 million, I'm not sure if I absolutely agree with them. But anyway, and let's have a look at the chart for SiteMinder. It's very exciting, isn't it? This company is moving on higher today. Well, the one-day candlestick is actually not that bullish. It looked like it could have been breaking out, but no, its share price has really pulled back to 570, and 570 is very important because it's in a resistance zone. So this was a potential breakout, and I thought maybe it is breaking out, but not quite. But otherwise, if you do look at the weekly chart, since it listed, it was in a long-term, well, not long-term, it was in a downtrend. Share price got as low as $2.60. It's more than doubled since then, and the share price is in a more of a good, longer, medium-term uptrend. But again, the valuation, $1.5 billion for a company that is barely operating cash flow positive. So you do have to pay for that promise, the potential of this company. If this company had a market cap of 150 million, I'd be way more excited. That's SiteMinder coming in at number 3. Coming in at number 2, we have a company that recently listed on the ASX. They released today results update and acquisition of West Coast Lining Systems. Few reasons why I want to talk about this company, even though share price is not up by all that much. It's a recent listing. T code is TAA. I don't know anything about this company, but the chart looks interesting. And this announcement today wasn't the sort of announcement that would bring me to buy some shares in this company, because they've been listed for less than 6 months, I believe. Yeah, so they listed in April, late April. So it's been on the market for less than 6 months. And I do have a rule not to buy companies that have listed within the last 6 months unless the company released or has released a profit upgrade. And this was not a profit upgrade. It's close. So when a company IPOs, they have projected profit revenue in the prospectus. And they actually mention here that the company will at least, that's probably important wording, at least meet its prospectus pro forma NPAT guidance of 33.5 million and statutory profit of 28.1 million. So there is a potential that they might beat it based off at least meet. So there is a potential this could be, well, it's not an upgrade. There could be an upgrade coming when they do release their results. They have also made a few acquisitions, so that makes me a little bit more wary that they're acquisitive, that sort of thing. And they also expect to deliver growth, both organic and programmatic acquisition perspective in financial year 25. It's really interesting. And they tend to release the results on 26th of August. So I actually don't mind this sort of announcements. I do like it. I do like the fact they expect growth, and there is potential that the results will be better than expected, which could lead to the share price going on a run and breaking out. And by that stage, they still would not have been listed on the ASX for more than 6 months. So I need that profit upgrade to get more interested in this company because the chart is starting to look interesting. Share price had moved into a downtrend. So in fact, on the day they listed, share price fell a fair bit and went all the way down to $1.44. In fact, the low was $1.42 on the 28th of May. But then all of a sudden, there was a pretty big day on the 11th of July, not that long ago, it's up 7.3%, up 7.3%. And it seems like after that, share price is starting to move up. So that one day was enough, 11th of July. And on that day, they released nothing. So it was just a little bit of excitement. Maybe it could have been a fund manager, not massive volume coming in, subtle increase in volume. You can see a subtle increase in volume in this period. Yeah, just after, on and after that 11th of July. So something happened there. It could be as simple as one fund manager getting interested. So the chart is starting to look interesting. I will give Tasme that. I don't even know what this company does, to be honest. Let's have a look what they do. I would assume they're in mining services, sort of that area. Some sort of services, mining, engineering, construction. So let's have a look at the About section. Here it is, About Tasme. Owns and operates 18 interdependent leading Australian diversified specialist trade skill services businesses focused on essential shutdown, program maintenance, emergency breakdown, and brownfield upgrade services of fixed plant for a blue chip essential asset owner customer base. Provide outsourced specialist maintenance to fixed plant for essential industry asset owners. So they do service mining resources, oil and gas. So they, in a way, they are a mining services company. It's interesting. They say they own and operate 18 interdependent. So that probably tells me that this company has brought in a few other companies and just combined them, all these companies into the one company, ASX listed company, which is called Tasme. So the fact that they are acquisitive is not a surprise if that is their route they've gone down. And it could work. Okay, so that's Tasme coming in at number 2. Coming in at number 1, we have Delorean. Share price dropped 22.73%. Now, I'm going to open up 2 announcements for this company. So last week, this company released an announcement that saw the share price rally 73% on the back of, and this was in regards to their results. So EBITDA 4.5 to 5.1 million, record NPAT for the year, cash at bank as at 30th of June 2024 of 8.8 million. And I thought, okay, this sounds pretty good. The market likes it. Then the company released their pennies 4C today. And let's have a look. So let's have a look. What I always start off with, this. So receipts, 11.9 million. So receipts are increasing for this company. But operating cash flow positive 4 million. But there was an interesting thing here called LGC shortfall charges refund. And I was thinking, take that away, and the company was actually operating cash flow negative. Now, in their commentary, so after I read that, and the other thing I should mention is this company paid back some debt. So they do have a little bit of debt, Section 7, $6 million of debt, but they have $8.8 million of cash. So they have net cash. So that's not a concern. But what made me not concerned, but sort of intrigued by this company, and I could understand why the share price is down, is because LGC shortfall, and I have no idea what this is, which might be important in a second. During the quarter, Delorean received a refund of 4.7 million in historic large-scale generation certificates, shortfall charges from the Clean Energy Regulator, contributing to this is the most important thing, contributing to the profit guidance as disclosed above. So contributing to the profit guidance was this potential one-off refund of 4.7 million. They probably should have mentioned that in that announcement last week. And I think that's the reason why the share price has decreased, because people are reading this and going, well, the whole reason they've had a good year is because of this refund from the CER, Clean Energy Regulator, and I have never heard of large-scale shortfall charges. So let's Google it. Let's Google it. Is this a one-off, or is this something that might occur on an annual basis for this company? I could go back a year, by the way. Actually, let's do that. Let's go back a year. Here it is, Clean Energy Regulator, certificate shortfall, large-scale generation shortfall. You must surrender large-scale generation certificates in proportion to your relevant acquisitions. Still no idea. Let's open it up. From the Clean Energy Regulator, you can carry. What is? Does this mean they're supposed to generate a certain amount of renewable energy, and if they don't, they have to pay a fine or a fee? Is that what it means? I'm just assuming that's sort of what it means, and because this company paid sort of a fee, and they really didn't have to pay a fee, they get that back. I'm going to go back 1 year. I'm going to go back 1 year and just see if the same thing happened last year. And if the same thing happened last year, then there could be a possibility the market is overreacting. Because if this is an ongoing thing they get each and every year, that would be interesting. No, there's no mention of it in last year's June quarter at Petty's 4C. So that does not mean they don't or won't get it every single year. This probably definitely needs a little bit more research. What hell is this large scale generation certificates? Is this a one-off refund, or is this sort of refund they might be getting every single year, which will help the company because it has helped them this particular quarter and this particular year as well. I go back, and if we go back to the cash flow statement, they were operating cash flow positive $6.9 million for the year, or $2.2 million without this particular LGC shortfall refund. So if you know what this LGC shortfall charge refund is, I'd love to hear from you. So I'm just going through this really quickly. A lot of this is just going straight over my head. I'd like a little bit more information. This is definitely the website, Clean Energy Regulator, but I'm not an expert in this area. Shortfall charges, $65 applies per LGC. You haven't surrendered. Refunds for overpayment. Is that what happened? They overpaid and got refunds for shortfall charges. If you've paid an LGC shortfall charge, you may be eligible to get a refund. The admin fee is not refundable. We calculate the admin, blah, blah, blah. We don't refund STC shortfall charges. Okay. There's all these things about how you're eligible for a refund. Yeah, I'll probably need a little bit more research on, but it's interesting. The market has viewed it negatively, and my thinking is, or thought is, has the market overreacted? Have they, maybe they don't realize that this could be an ongoing refund they get every single year? I actually don't know, but it is interesting, and it could be important, because if you have a look at the chart for DeLorean, it looked like the share price was breaking out, and this market reaction today has put a really hard break on this potential breakout. I was paying close attention to this particular chart. A lot of volatility, and I was thinking this could be it. And look at the volume as well. I know. So that's DeLorean coming in at number one. Few other companies that released their Pennies 4C they haven't talked about. Space Talk. Don't know anything about this company. I'm pretty sure they don't do space, anything to do with space. I think they own phones or something like that for children, or something like that. I don't know. But actually, let's go to the about section. I always do this about section. And they are software services and wearable hardware product developer. What sort of wearable hardware? So a watch. Is that a watch? They make watches or something like that. Oh, Space Talk's core wearables hardware is effectively a child's first mobile phone. I was sort of on the right path. What else I know? Okay, so why is share price up? I have a feeling it's up because the company is operating cash flow positive, $849,000. I'm not sure if this is the first year. Nice receipts, maybe not record receipts, but maybe they are operating cash flow positive this quarter because they've put a bit of a lid on costs. Chart doesn't look that great for Space Talk. SPA. Share price had been in a bit of a funk, and really is still in a funk. A nice little run back in early 2023, but in the market cap of these companies less than $10 million, or around $10 million. So definitely one to probably put on your watch list, because if they can replicate this sort of quarter moving forward, who knows? Pie in the sky sort of stuff. PointsBet up 3.1%. This actually, Pennies 4C, did interest me. And there's one reason why it interests me. It was the operating cash flow was really high, but receipts had not grown, which does not interest me. I want to see growing receipts. So receipts, it could be that because I sold stuff. Receipts 68 million, operating cash flow positive 13.6 million. Do spend a lot of money on intellectual property, 4.1 million. There is sale of US business. That could be a reason why receipts are down. But operating cash flow positive, $13 million in one quarter. I want to see, and the market hasn't reacted that well. Let's have a look at the chart. And this is very important because they've given back their shareholders some, like a capital return because they sold that US business. That's why you see these big drops in share price. So if you hit the adjust button in TradingView, adjust data for dividends, it'll completely change the chart. You get a completely different perspective if you adjust for dividends. In fact, if you adjust for dividends, the chart doesn't look half bad. Not the best looking day today, one day candlestick, but I'm going to put this company back on my watch list just because $13.6 million of operating cash flow is quite high. Okay. VR1, I'm pretty sure this company is pretty much hated. Share price up 10%. I remember looking at one of their pennies 4Cs maybe year and a half ago, and they had like $9 million receipts, but spent $10 million on product manufacturing in operating costs. And I thought, not for me. Thank you very much. But I've noticed in the last few quarters, this company is starting to look more interesting. Receipts to customers, $9.5 million for the quarter, $36 million for the year, operating cash flow positive for the quarter and for the year. And this quarter, $1.284 million. And not only that, free cash flow positive. Yeah, free cash flow positive. But the market doesn't like this company just yet. The markup's not that high, and the chart has looked awful. So definitely another potential turnaround story if they continue increasing revenue, receipts, and become more and more operating cash flow and free cash flow positive. This could turn around. Markup is only $22 million. So definitely another one to put on your watch list. And finally, structural monitoring systems, up 4.8%. It was up by a little bit more than that, wasn't it? It got to a high of 75 cents today, so there was a little bit of selling. And I expected a really good quarter in terms of cash receipts, growth, and operating cash flow. I didn't really get that. Not much growth in receipts, and the company was operating cash flow negative. And was in fact positive for the year. So not the greatest quarter from the company. However, the chart does look a little bit different than VR1, Vection, and what's the other one? And SPAR. There's a little bit more excitement in this company recently. There it is. Share price has taken off, although a pretty negative one-day candlestick. A lot of selling coming in today. Okay, so that's all I've got for the Appendix 4Cs. Drone Shield is in a trading halt, doing a capital raising. I'm pretty sure they recently did a capital raising. I'm almost sure they did a capital raising a few months ago. Yeah, May. So they're doing another one. And the other one was Curvebeam. They're also doing a capital raising. Yeah. Trading halt. They haven't mentioned it here, but I'm pretty sure they're doing a capital raising. And CIP, Industrial REIT. Now, I won't talk about this one. It made it closely. I do like reading their presentations. We'll have a look at their results announcement. So some of the things I will look at here is net tangible assets. So that's $3.87 per unit, and the company is $3.18. So they are trading at a discount to NTA, which is important. The other things I look at are distribution, funds from operation, distribution, and they are growing. Also, the WALE, weighted average lease expiry, which is not that high for this company, if I remember correctly, and also gearing. So they aim for 30 to 40% pro forma gearing. They've got 34%. So those are some of the things I look at. This is a industrial REIT, not a office or retail REIT, so I wouldn't be interested in those sort of REITs. This is the sort of REIT I would be interested in. We'll have a quick look at the chart. Centuria Industrial REIT. And it looks better than some other REITs because it's an industrial company. And long term, it's actually a nice trajectory in share price, isn't it? In fact, Well, actually, if you adjust it for dividends, it does look much better. Now, adjust it so it takes out the dividends, yeah, not as good. I know. And I'm just going to talk about one comment. No charts, no charts. I want to talk about one comment. Chris and Caroline, no mention of Audinate, got hit a bit today on broker downgrade. I never have a look at downgrade or brokers downgrades or upgrades. I don't understand why people will buy or sell on a broker downgrade or upgrade. Doesn't make sense to me. And one of the reasons is because I'm cynical when it comes to downgrades or upgrades, because sometimes, and this is just my opinion, sometimes they just do the downgrade or upgrade because the share price has dropped or risen. And they go, we're going to look a little bit silly if we're saying this company is worth, for Audinate, maybe $21, and now the share price is 14. So we're going to have to lower our price, our valuation of this company to make us look less silly. So when I'd love to do a bit of research on this, or know if anyone's done research on this, is whether or not a company's share price is in an uptrend or downtrend, whether that can affect brokers putting downgrades or upgrades out. For instance, Audinate share price has been dropping recently. And I'm just wondering, because the share price is dropping, more brokers are more inclined to put out downgrades because they will look silly. If they put, say, their price at $24 and the current share price is $14.82, yeah, they'll probably look a little bit silly if their valuation is way higher than the current share price. So I wouldn't be surprised if a lot of brokers do that. And that's one of the reasons I just don't look at brokers. And another reason I don't look at broker reports is because I'd rather trust my own opinion, my own thoughts on a company. So a lot of people don't. They just look at broker reports and buy on the basis of that. And that's one of the reasons why I didn't mention Audinate. And to be honest with you, I had no idea there was a broker downgrade because I don't look for them. That's all she said about that. Sorry, Neppy, had to repost this comment. I guess you missed my old comment, OSL now above 1 cent, closed today at 1.1. Thoughts on buying since now it's over 1 cent. That is interesting, Nathaniel Gray. Yes, I'll do one more comment here. No, not necessarily. So one of my rules is not to buy companies with the share price below. Oh, it's gone on a little bit of a run. Maybe you should have bought at 1.1 cents. So it's gone a bit of a run. So they did release their pennies for seed today. So this, in my opinion, is still a little bit of a story stock. And the reason I say that is simply because receipts are really low. I need to see some proof of concept. That's just me and my risk tolerance. If you think this company has a lot of potential, then getting in early could be a good thing, but you just have to ride that volatility. So let's have a look at the chart. What was it? OSL? Oncosul? OSL? And yeah, the share price has gone a bit of a run recently. Whether this run is long-term, don't know yet. So again, it's more of a story stock. I want to stay away from story stocks. This is just a personal thing. Stay away from companies with a share price below 1 cent, and it's just gone above 1 cent recently. But if you like the potential of this company, and that's another thing, I have no idea about the potential of this company because there's so many companies on the ASX, and because they have very low receipts, $79,000 in the last quarter, $277,000 for the year. I have not done any research on this company, and that's just me. If I was 20 years younger, I might be attracted to these sort of companies, but my risk tolerance is a little bit lower, and I tend to go for those companies that are proving their business model, and OnConsult is just not there at this point in time. But I don't want to dissuade you from buying into this company because I think you have to find those companies and that investing strategy that works for you. We are all different, and we all should have different trading and investing strategies. Okay, so that's all I have for today's video. Yes, I've got 5 minutes to spare, which is good. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.